Are we just waiting for Nvidia, Mark?
Unfortunately, we are to some extent, and that's a weird thing to say for a macro guy like myself. Nvidia essentially is one of the biggest macro inputs in global markets now. And it's a hard one because when you come from my background, you're not used to the bottom-up analysis to study these earnings, and yet every single macro trader, whether they're a fixed income guy, an FX guy, a credit allocator, or just asset allocator around the world, needs to care about Nvidia. Even in commodities, they need to care. This is going to affect risk assets. It's going to move stock markets. It's going to say how the trend kind of sets for asset markets around the rest of the world over the next couple of weeks. So yes, we are waiting for it. Now, the backdrop going to Nvidia is very, very constructive. We've got central banks with dovish reaction functions. Growth is not brilliant, but it's okay. It is still doing okay around the world. And that environment of support of central banks and still okay growth means that it's generally a positive macro environment going into those Nvidia earnings.
Which is great, except for if Nvidia misses pretty substantially. And I'm curious how that shows up or how that has a ripple effect, not just in the broader stock market, but in the broader kind of financial conditions, is like how long that malaise could potentially last if we do see a miss, or if this is the time that winning streak snaps.
Yeah, we've been trying to work out kind of what the reaction function here is. I think it's important that Nvidia is so volatile in terms of its earnings and growth trajectory. It's been moving so fast, I don't mean just the stock price, that I think that if there's a miss that is not crazy, then it doesn't undermine the whole narrative because expectations have risen so high. So I think if we get a miss, we get short-term volatility, we get a bit of a disappointment. But given that we had the July clean-out of some of the kind of exuberance already, I don't think it's that bad, and we quickly get back into that bullish narrative. I think for us to suddenly kind of derail stock markets, it needs to be an absolutely humongous miss, a material miss that I just don't see any evidence from, and anybody involved in the tech sector tells me there's no chance of a miss in that scale. Yes, there's a chance of a miss just because our expectations got so elevated, not because the model is suddenly broken, not because the bubble is ready to pop from the bottom up yet.
Hello and welcome to a new video. The team here at Investor Hub are expecting a strong earnings report this week from Nvidia, and we're also expecting some positive future guidance. Based on the results, we're expecting a 5% increase in share price after earnings, and we're expecting Nvidia's share price to be up about 30% or around $160 by the end of this year. So in this video, we'll discuss the earning numbers we're expecting and how this impacts our guidance. Now, before we go into the numbers, the team here at Investor Hub would really appreciate it if you would consider subscribing. We're not here to sell you anything. We just want to share our investing journey with you and have a discussion and share ideas. Now, I know Brian and our team spends a lot of time editing these videos, and I'm sure he'd really appreciate it if you would follow. Okay, let's have a look at these numbers. So expecting revenue for the second quarter to be $28.75 billion. Now that sounds like a big number because we know Nvidia has been killing it lately. But how does this compare to the second quarter revenue from last year? Well, as you can see, it was only $13.51 billion. Only $13 billion, right? So expecting 112.4% increase, which is insane. Now, you have to bear in mind that this is a big increase, but the reported earnings need to slightly beat the expectations because the share market is very fickle at the moment. So if we're slightly below expectations, Nvidia's share price will likely crash. Now we can see the surprise results are kind of trending down. So you'd expect Nvidia to beat earnings by around about 3% this time, but it's hard to say. Let's have a look at expected earnings. So second quarter last year, we can see earnings at 27 cents per share. And this year, we're expecting 65 cents per share. So that is a 140% increase. So that is very good indeed. One of Nvidia's main suppliers is TSMC. They reported earnings on June 30, and we can see revenue for them increased from $15.47 billion to $20.66 billion. So for the team here at Investor Hub, that is telling us that there is strong demand from Nvidia, which signals strong growth for Nvidia. And that would make sense, since hyperscalers such as Google, Amazon, Microsoft, and Meta have stated that they will continue to invest heavily in AI. They also said that the benefits of AI are yet to be fully seen, but they don't want to get left behind. So all of this is good news for Nvidia at the moment. So at the moment, at Investor Hub, our portfolio is 12.4% Nvidia. And after much debate, we decided to hold our position. Like I said, we're expecting strong numbers, but the share market is a bit soft at the moment, so there is some risk involved. So we have a hold position on Nvidia at the moment. But what are your thoughts? We'd really appreciate some feedback. We will have a follow-up video after earnings, so make sure you subscribe and follow. Thank you for watching, and I'll see you in the next one.